Hi everyone, I'm Joseph Ton. Welcome to Basic Business Finance. Today's topic is Structure of Financial Statements Part 2, Lecture 2, Part 4. The objectives here is that you will learn to explain different types of operating and other expenses. We'll touch on the structure of financial statements, income statements, structure of the income statement. Let's do example 1 to help me to explain things to you in bite size. I'll break down in bite size so that you can understand it easier. This is the income statements. You can look at here, sales revenue, 70,000. In an income statement for a trading or manufacturing firm, you typically start with sales revenue. So this 70,000 is the sales revenue for the company. Sales revenue is the total amount of goods sold in the period recorded at the selling price. Take note, this is selling price. So you sell here in this case, they sell and make a total revenue of 70,000. They sell at a certain price. All right. We can look at the statement again. There's additional 2 items. Cost of goods sold is deducted from sales revenue to arrive at gross profit. So basically, sales revenue minus cost of goods sold gives you gross profit. A gross profit of 40,000. So this is how you find your gross profit. Gross profit is an important figure in this statement because as it represents the success of the firm in selling its good above the cost price of the goods sold. So basically it means that your selling price is higher than cost price. That's why you make a gross profit. So from here, we know that sales revenue less cost of goods sold gives you gross profit. Let's move down. In operating a business, many activities such as selling, general and administrative activities are required to support the business. So in business, you got to spend on all these things. So you can look at the statement itself. We have selling expense, general and admin expense, and depreciation expense. All these expenses has to be considered in, so that you will be able to find out at the end of it how much profit you really make for the year. Okay, you cannot just neglect or omit, okay, or ignore any of these figures here. These expenses are deducted from a gross profit to arrive at the operating profit. So your gross profit of 40K minus a selling expense, your G&A expenses, depreciation expenses, okay, gives you 29,000, which that is your operating profit. The interest and other non-operating expenses are deducted from the operating profit. They do arrive at the net profit before tax. So you can look from here. Your operating profit of 29,000, you less off your interest expense, 1,000. You give you a net profit before tax of 29,000. Finally, your income expenses is deducted from your profit before tax to arrive at the net profit after tax. So you look at the statement now. Net profit before tax, this remember, the word is before tax. Okay, it's 28,000. Less of your tax, 4,760. You give you a net equals to net profit after tax of 23,240. So it's a very simple calculation. At the end of it, you get your net profit after tax. But take note of the sequence, okay, the concept. Understand the concept, and it'll be easier for you. In Singapore, the corporate tax for a company is normally about 17%. This means a company that earns a profit will pay an income tax at this rate. We have covered the main features of an income statement. From here, with this skill, you are able to learn to at least have a basic understanding of how to understand an income statement. We have come to the end of this section. Thank you for listening to me. See you soon.